Okay, it took me a few months, maybe even years, but I figured it out. I figured out Meteora DLMM pools. I understand how to do it now. I understand how to make money, and I understand what impermanent loss is. So in this short, sub 5-minute video, here is an actual clear explanation as to how to use DLMM pools on Meteora. What these pools are is when you're on Deck Screener and you see the liquidity amount underneath for whatever shitter you're about to buy, you basically become this liquidity pool for whatever token you decide to open pools with. And what this means is that if you put in Trump coin into a pool, or if you put in Sol into a pool, you are selling that asset for another asset in return. So if I open up a one-sided pool that only has Trump in it, that means that whenever anybody wants to buy Trump on BullX, 8 Pro, Photon, Nova, wherever, they are buying my Trump with their Sol. So when I open this one-sided pool of Trump, they get my Trump and I get their Sol. And the opposite is true too. If I open up a one-sided pool of just Solana in Trump, then that means that when they sell their Trump and get Sol from it, they're getting my Sol. When you open up a double-sided pool with Trump and Sol, what this means is that when anybody buys or sells either, they are swapping in between your liquidity that you've provided. Now, the number one thing that you hear people say about DLMMing and opening up these types of liquidity pools is impermanent loss. Impermanent loss just means if you put in Sol and Trump into a pool, you have the risk of all of your Sol being bought and you're only left with Trump, or you have the opposite risk where all of your Trump is bought and you're only left with Sol. This could be bad if you open up a shitter with Sol and people keep selling their shitter and you end up with it. If that shitter goes to zero, you end up with worthless tokens that are worth zero. You still have them though, and all of your Sol is gone because people were selling into your Sol, taking your Sol and giving you in return a shitter worth nothing. So either side is possible for impermanent loss. Most of the time, if you end up with just Sol, it might not be that bad, but other times if you end up with just a shitter that is worth $0, it can be pretty bad. But a good example of when impermanent loss might not be the worst thing in the entire world is if you open up a Jupe and Sol two-sided pool. If you are bullish Jupe long term and people keep on selling their Jupe and you end up with majority Jupe and no Sol, then that might not be the end of the world of you in terms of impermanent loss if you are long-term bullish on there. Or if for a certain price action, you end up for a short amount of time just with Jupe and zero Sol, and then over time you believe that the prices will fluctuate and you might end up back with Sol, that's fine too. Either way that this goes, whenever anybody is buying or selling into your pools, you earn fees on it. So even if you end up in impermanent loss and you have a million worthless bullshit tokens, you still made some fees along the way. Will it make up for your loss? Probably not. And the way that you make money in any type of pool is the buying and selling of these two tokens, whether it's USDC and Sol, or USDC and Trump, or Trump and Sol, whatever the two pairs are, or if it's even one-sided. Anytime it's bought or sold, you make money, a small percentage in fees on these trades. Now that's understood what exactly DLMMing is, let's see the three different types that you can do. So the three most common ones are spot, curve, and bid-ask. Three different strategies to three different types of DLMMing. Spot pools are for consistently priced tokens that don't fluctuate that much. An example of this is Jupiter token. It usually ranges from 80 cents to $1.10 in there. And there's high support for it to go past $1.10, and there's also support for it to go below around 70 cents. In any type of pool that you open, you need to do your own TA to decide, okay, what are the ranges of consolidation that these tokens go through that I know if I open up a spot pool, it won't dip below this and it won't go above this. This consolidation period that you determine here is the place that you make money. You make money with these pools in most of the time consolidated periods before an upwards trend or downward trending breakout, depending on what you're doing. Curve pools are usually for stable coins. So this is a Sol to USDC pair or USDC to Trump pair, something like this. But the thing about anything USDC paired with is that it's tough to get volume on these. The majority of trading volume is XYZ token with Sol, because whenever you trade on BullX or 8 Pro or Nova or Photon, you don't sell into USDC, you sell into Sol. So the majority of volume that you do will be with a Sol pair. And the third one is a bid-ask pool. A lot of people use these for hype launches. Like Jupiter just had its second airdrop today. A lot of people like Easy were using this for Pengu when it dropped back in December. This is for something that you don't necessarily know the way it's gonna go, but you know that before it goes upwards or downwards in a high fashion, you can make money on the fees in between these prices. So for any of the types of pools that you choose, it's important that you do your own TA. You have the same risk with LPs as you do holding shitters. If price goes up, that's good for you. If price goes down, you lose money. But with LPs, instead of just holding through consolidation periods, you can actually make money by providing liquidity during these sideways trending times of any coin that you're in. So an example that we can use here to kind of show what the best case scenario for your trade is if you bought Graphane at like 200 million market cap. It goes to 250, then 180, then 270, whatever. But during the time that you've held this coin, you're of course hoping that it goes up with your spot bags. But if you're a long time holder and you notice, okay, around 200 mil to 230 mil is where this token consolidates and trends sideways for a long time. During this sideways price action is when it's most profitable, most likely, for you to open up an LP of this token. So instead of just having it in your wallet and praying that it goes up, you could also provide liquidity for it and earn fees on it. And then once it breaks up or down, you can always just pull that liquidity out, take your fees and run off with your coin and continue holding spot. This is the best case scenario. Again, if price goes up, it isn't necessarily better for your coin if you have an LP, but if price goes down, that of course could be bad for your coin as well. Ideally, you catch coins during consolidation periods that have high volume that you can put SOL and Graphane into and get money whenever anybody buys or sells it. Another great example was the recent Trump release. Trump coin did billions of dollars in volume. I think more people probably cooked off of the LPs if you did it right than the actual coin holding spot, because for a while it was super downtrending, then super sideways, and then randomly shot up. If you were someone that was watching this chart and you had a spot bag, if you noticed this consolidation that still had billions of dollars in volume here, you can make a lot more money here, close your position, and then hope it goes up or hope that it goes down. You can continue to hold it. But as with anything, these are of course still coins. There are risks involved with any of them. So the three things that you can look out for before opening any position: which pool and which token has the most volume. Number two, of these pools which have the highest volume, which of them have the highest 24-hour fees as well. So that percentage that you see there is every dollar you put in, you get that percentage of fees back every 24 hours. This again could be something you hold over a long period of time, but with it comes risk, which we'll go over later in this video. But ideally you go for the one with the highest fee volume. And number three, which coin do you know to LP that you have the greatest, most confident TA on that will follow the price action that you think you need to make money on this LP position? So like, let's say you just open up Trump coin, you don't know anything about it, and you're like, okay, high volume LP, let's make some money. That alone is not enough for you to actually make money on this token. If you caught it in a really high uptrend or a really low downtrend, you might not make money. Like I said, the majority of times you're looking for consolidation periods in these shitters to actually make money on them. So now, putting what we just said into practice, let's try to open up a pool and see which one is the best for our type of investment that we're trying to do. So we're here on the Meteora Pools main page, not dynamic pools and farms, none of this, just DLMM. We can see here over 1.4 almost billion dollars value lock, which is crazy. All we're gonna do is categorize this by 24-hour volume. Like I said before, Trump is still killing it, but these are USDC pairs. We're gonna look for SOL pairs. Like we said, the majority of times that people trade a token, on any bot especially, or even on Jupiter most of the time, it's SOL swapping into a token or a token swapping into SOL, not USDC. So we're gonna go for that because we feel like, or that's shown, it's one of the highest TVLs here and 24-hour volume. So here, once we're looking here, we need to understand what bin step is. Bin step isn't necessarily anything crazy. I know when you read it, it sounds very technical. The higher a bin step number is, the wider you spread your liquidity and the lower fees you make. Meaning, instead of saying, I think Fartcoin trends very, very well and sideways from $3 to $3.4, what you're saying is, I think it trends somewhat from 2.9 to like 5.1. Your spread and price action is much more wide, and the liquidity that you inject is going to be much wider as well, so you collect less fees. But with a lower bin step, it means that I am confident that there's going to be a sub 3 to 5% price movement on Fartcoin. And because of that, I'm going to make my bin step pretty small. And with that, you collect more fees. So the smaller your bin step is, the tighter the spread of price action can be. The bigger your bin step is, the wider the spread. But with tighter spread, you get more money in fees, and with higher spread, you get less money in fees. But higher is usually less risky because you have a lot more percentage to work with in terms of price action, and then tighter is of course more risky as well because you have a smaller price action that you can deviate from. So in this pool, we can see that the 24-hour volume for Trump SOL with a bin step of 20, which is pretty small, and a fee, this is their own fee, and a 24-hour fee of 5.17% is the top performing pool here. So we'll click this and we'll see what it looks like to open a position in this. So here we can see that the total liquidity I provided is 0, fees earned is 0, current balance. This will change because like I said, when you provide liquidity, they buy and sell your tokens at a certain rate and a certain price. So when you put in 10 SOL and you check back tomorrow, it could be 5 SOL and 5 SOL worth of Trump. So the example I've been using is Trump because that is the most recent one people have cooked cooked hella money off of. But what I want to do today, because of the Jupiter's 2nd anniversary drop today, is Jupiter. So as we can see here, it's in the top like 6 in terms of volume. You can see here there's 30 million almost in 24-hour volume. 24-hour fee is 1.3%. Not bad if you're looking for like a low risk type of thing. And then here the bin step is 80. So what we just learned is that 80 is pretty high. That means that maybe they're saying from $3 to $4 is where I want to provide liquidity. Here bin step being 5 means from 3 to like 3.10 is where I want to provide liquidity, which is a much smaller range. We're going to fuck with this wider spread because the most money is in here and because the fee per 24 hours is the highest. Also, this 80 bin step is okay with me because this is not something that I want to be watching. If you have a tight spread and low bin step, you're going to have to actively manage that position, and that's not something I want to do. So we can see here that I put in 10 SOL here, not 10 SOL with a jupe, but just 10 SOL. So what I did was a one-sided liquidity, meaning here's 10 SOL. If anybody ever wants to sell their jupe, here's my SOL to give them for selling it. And anytime that happens, give me some sort of fees for it. So I've only done this for a couple hours. I got $2 in fees here. I mean, not bad. I guess I didn't really do anything. But the way that I did this and why is because me as a long-term bullish outlook on Jupiter, instead of providing Jupiter and SOL to do double-sided liquidity, I just wanted to do here's 10 SOL. Over time, whenever people want to sell me their Jupiter, which is usually when the price of Jupiter will go down, allow me to basically DCA into this position in the best price possible. But instead of just a regular DCA on Jupe, I actually get fees for every single time a swap happens. And once again, the reason that I chose spot is because I'm okay with the current price action. I believe that it's going to stay around that price action for the next however long this is open. And I'm okay with my SOL becoming Jupe if this price goes down enough that people sell their Jupe into my SOL that I've given them. Because again, I'm long-term bullish Jupe and I don't mind ending up with all Jupe. But if you open up this position with a coin that you actually don't have that much faith in, like whatever bullshit shitter that just came out, there's a chance that you might end up with 0 SOL here and 100% shitter. And that shitter could be worth 0. And that SOL is gone because somebody bought it and sold you their shitter instead of it. But I'm okay with this position because I'm long-term bullish Jupe and I don't mind this. So this is basically me slowly DCA into Jupe, but with fees with it. Curve here, something we won't actually open up. Like I said before, Curve is what you're using mostly for stablecoins and pairs that price doesn't change at all, really. Curve isn't really necessarily something you're going to use unless you're trying to actually farm somewhat fees with USDC. I think the majority of us are going to be utilizing SOL and X shitter. But again, this is something that once you've learned spot and bid ask, I think you should look into Curve if you're looking to do a stable pair type beat thing. But again, most of us might not be doing that.